Imagine this for a second. You've uh, you've built up a nice retirement stash in precious metals. Gold, silver, maybe some platinum, palladium, all sitting safely in a precious metals IRA,
hmm Standard setup for many.
right? But then maybe retirement's getting closer and you think, you know what? I don't just want that cash equivalent. I actually
Yeah.
want to hold those bars, those coins
Yeah.
in my own hands. Is that even allowed? Can you do that?
That's the big question, isn't it?
Welcome to the deep dive. This is where we take your questions, look at the sources you send us, and really get into the nitty-gritty.
Yep, digging deep.
Today, we're looking at something pretty specific, maybe a bit overlooked, for precious metals IRAs. It's called an in-kind distribution.
In kind, meaning you get the actual kind of asset.
Exactly. And we've got some solid research to guide us here. It's from Doug Young. He's an analyst, gold IRA, precious metals. Got over 20 years in financial markets.
Okay, good foundation then.
So our mission today, let's break down what in-kind distribution really means. Why might you even think about doing it? What are the actual steps?
The process, yeah.
And critically, the rules. The IRS regulations you absolutely need to be aware of. Plus, we'll weigh the good against the challenges.
Pros and cons, always important.
So you can figure out if it makes sense for your situation. Okay, let's get into it, because this is where it gets really interesting. It's not just about the money on paper, is it?
No, it touches on something more fundamental for a lot of people.
It's about control. Real physical control over those assets. I mean, you can imagine holding that, right? That piece of your retirement.
Absolutely. And what's fascinating, like you said, is that an in-kind distribution lets you take delivery of the actual metals. The physical gold, the silver, whatever you hold.
Instead of just getting a check after they sell it.
Exactly. You're not liquidating. You're basically just transferring the ownership of the physical bars or coins from the IRA custodian directly to yourself.
Okay, that's a key difference. Not just physically, but how it works financially too, right?
Yeah.
So the first hurdle, I guess, is figuring out the value.
Definitely. The IRS, they're going to tax you. And it's based on the fair market value of the metals on the exact day the distribution happens.
Not what you originally paid for them
Right,
years ago.
It's the value on that day,
Yeah.
which is crucial because, prices fluctuate. That day's price determines how much taxable income you've just received.
So you need to be watching the market right up until you do it.
Pretty much. And to get that fair market value, you'd look at the current spot prices, obviously. But you really need to talk to your IRA custodian.
They should provide the official valuation.
Yes, based on the latest data. It's always smart to get an updated appraisal very close to when you plan to take the distribution because, like we said, markets move fast.
Right. And that move hits your tax bill directly.
Exactly.
Okay, so why?
Great.
Why go through this hassle instead of just taking the cash? The research points to a few things beyond just wanting to, admire your gold. One big one mentioned is this thing called net unrealized appreciation. NUA. That sounds potentially powerful, but maybe a bit niche.
It can be, yeah. NUA is one of those tax code things that, if your situation fits, it could potentially save you quite a bit on taxes. Not always, but potentially.
How does that work, roughly?
So basically, under very specific circumstances, it might let you defer paying ordinary income tax on the growth part of the asset's value until you actually sell the metal later on.
So you pay tax on the original cost basis now, but the appreciation might be taxed later, possibly at lower capital gains rates.
That's the potential, yes. It requires careful planning and meeting specific IRS rules. It's not automatic. But it's a reason someone might take the physical metal instead of cash from the IRA.
Interesting. Okay, what else? Asset preservation.
Yeah, that's a big one, too. If you really believe in the long-term value of those specific metals you hold, maybe certain coins or bars.
You don't want the custodian to just sell them off.
Right. You want to hold on to those specific assets because you think they'll appreciate further. Taking them in kind lets you do that. You maintain that direct connection.
Makes sense. And the research mentioned something about speed, that sometimes getting the metal is faster than selling. That seems counterintuitive.
It can be, sometimes. If you hold, say, less common coins or bars, finding a buyer at the price you want might take time.
Okay. Versus just initiating the distribution process with the custodian.
Exactly. If you need the asset itself relatively quickly, sometimes the direct physical distribution might be more straightforward than navigating a sale first. Plus, there's the whole diversification angle.
Right, having physical assets outside the traditional financial system, stocks, bonds.
Physical metals can act as a hedge. They often move differently than the stock market, which can be appealing, especially when things feel uncertain economically.
So it adds another layer to your portfolio.
It does. And beyond the numbers, it really comes back to that control point. For some people, tangible assets just feel more secure.
Especially in, like I said, uncertain times.
Yeah. Having that gold or silver in your possession, not just as a line item on a statement, that offers a different kind of peace of mind for some investors. An in-kind distribution is really the ultimate way to achieve that direct control over those specific pieces you own.
Okay, I think the why is becoming clear. So let's shift to the how. If someone decides, yes, I want to do this, what are the actual steps, practically speaking?
Well, first, as we discussed, nail down the value. Get that fair market value appraisal from your custodian right around the time you plan to do it.
Step one, valuation. Got it.
Step two, contact your gold IRA company or custodian. They handle the logistics. You'll need to tell them exactly what you want to take out, type of metal, amount. There will be forms.
Paperwork, of course.
Always paperwork. Then the crucial part is arranging the delivery, secure shipping.
Yeah, you don't want that getting lost in the mail.
Absolutely not. Your provider should use a reputable shipper, someone experienced with valuable items like precious metals. And it must be fully insured and tracked.
For peace of mind during transit. Makes sense.
Totally. You need that confirmation and security.
And we talked about timing impacting value. The research really stressed watching the market, maybe talking to an advisor about when to pull the trigger.
Definitely. Because that market value on distribution day sets your taxable income. So yeah, monitoring trends, getting advice on whether now is a good time relative to prices and your tax situation, that's smart. Be ready for those value swings.
Okay, rules. Let's talk IRS rules. What are the big ones here?
Well, the main one is taxation. Like any traditional IRA distribution, whether it's cash or in-kind metal, it's generally taxed as ordinary income based on that fair market value on the distribution date.
So it adds to your income for that year.
Correct. And don't forget the early withdrawal penalty if you're under age 59 and a half.
Ouch. That's a 10% penalty on top of the regular income tax roll.
Yep. 10%. It's a pretty significant deterrent unless it's an emergency and you meet one of the few exceptions.
Good to know. What about RMDs? Required minimum distributions if you're, 73 or older now?
That's right, 73 or older. RMDs absolutely apply to precious metals IRAs, just like other IRAs. The IRS wants you to start taking money out.
Can you satisfy your RMD by taking an in-kind distribution?
Yes, you can. The fair market value of the metals you take out counts towards fulfilling your RMD for that year.
But the value has to be enough, right?
Exactly. The market value of the distributed metals has to meet or exceed your calculated RMD amount for that year. If it falls short,
then you still owe the difference.
You'd need to take out more, either more metal or potentially cash, to make up the difference and avoid penalties on the RMD shortfall.
Okay, so the tax implications, it's ordinary income, could bump you into a higher tax bracket for the year.
Potentially, yes. That's why talking to a tax advisor beforehand is really, really crucial. They can help you understand the full impact and maybe strategize a bit to minimize the tax bite if possible.
Right, so there are clear benefits that control potential tax angles like NUA, diversification.
Yeah.
But we need to be real about the downsides too, the challenges.
Absolutely. Number one is probably liquidity.
Meaning turning it back into cash if you need it quickly.
Exactly. Holding physical metal is great, but it's not like selling stock with a click of a button. Selling physical gold or silver takes time. You need to find a buyer, agree on a price, arrange delivery.
There might be transaction costs, dealer markups.
For sure. So, if you suddenly need cash fast, relying solely on selling your physical metals might be problematic. You need a plan for liquidity outside of these assets.
That's a really practical point. And then there's the whole, where do you put it?
Yeah. Once it's out of the IRA depository, storage is entirely your problem.
You need a really good safe. Or pay for vault storage somewhere else.
Yep. A certified home safe, maybe renting space in a private depository, getting adequate insurance. These all add costs and logistical hurdles. It's a whole different kind of responsibility than just having the custodian handle it.
Plus the market itself. Metals can be volatile, can't they?
They certainly can. Prices go up, but they also go down. While they can hedge against some economic issues, you're still exposed to that market risk. The value of what you hold can fluctuate quite a bit.
So diversification within your overall plan remains key.
Always. You don't want all your eggs in one basket, whether it's stocks, bonds, or physical metals. Spreading investments helps manage that volatility risk across your entire financial picture.
Okay, so let's try to wrap this up. What's the bottom line for someone listening?
Well, we've seen that taking an in-kind distribution, getting the physical metal from your precious metals IRA is definitely an option.
It lets you get that gold, silver, platinum, whatever, directly into your hands instead of just cash.
Right. And the potential upsides are there. Diversification, maybe keeping specific assets you really believe in, that tangible control, and maybe, just maybe, some tax advantages with NUA if you qualify.
But, and this is a big but,
Yeah, you've got to weigh the downsides. The tax hit is based on current market value, which counts as ordinary income. You've got RMDs to worry about if you're over 73. That 10% early withdrawal penalty if you're under 59 and a half.
and the practical stuff, figuring out liquidity when you need cash, secure storage, insurance, plus dealing with market swings.
Exactly. It's not a simple decision.
So this deep dive really shows that while in-kind distributions offer this unique flexibility, this tangible connection, it's absolutely not for everyone.
No, it's definitely not a one-size-fits-all strategy.
You really have to look hard at your own financial goals, how much risk you're comfortable with, your overall investment plan. Probably best to talk it through with a financial advisor you trust.
Absolutely essential. And, considering all this complexity, it does raise a broader question, doesn't it?
Which is?
In today's world, with so much financial information, so many products and strategies, how do you, the individual investor, figure out what actually makes sense for your specific situation, your personal financial landscape?
That's a big question indeed. Which leads us to maybe a final thought for everyone listening.
Go for it.
Consider this. In this constantly shifting economic climate we're in, what role could something tangible, like physical precious metals, play in giving you a different kind of peace of mind for retirement? Something beyond just the dollar value.
A different sense of security, perhaps.
Maybe.
Yeah.
And maybe think about how much of that potential peace of mind simply comes from understanding all the options available to you, even the less common ones like these in-kind distributions, just knowing what's possible.